Okay, so let's take a look at some trading pairs right now. Not Paris, sorry. People from Paris, if you are watching, hi. But I mean pairs. So let's take a look at the trading pairs. So what I mean by trading pairs, when we go to crypto exchange, when we take a look at Binance, so we can go to trade and advanced, we can see that here we can choose our asset, right? So let's take a look at this. We can choose BNB, which is Binance coin. We can choose Bitcoin. We can choose altcoins, and altcoins are basically Ethereum, Tron, or Ripple. We can also choose fiat, right? But what I mean by that, so as you can see here, for example, this ADA is Cardano, and we have ADA/ETH. So we have ADA Ethereum trading pair, right? But we also have ADA BTC. So we have Cardano/Bitcoin trading pair. When we go to fiat, you can also see that we have ADA/USDT. So once again, we have Cardano against US dollar. So you can trade all these cryptos, but with different pairs. So let's take a look at it. When we go here, we can, for example, choose Link/Bitcoin, and we can compare it, for example, to a Bitcoin. So right here we can see how these two are correlated or not, and what we can read from this, right? So as you can see, at certain points the price is quite mirrory, which means that the price is like a mirror. It is doing exactly the opposite, but it is doing opposite when it comes to extended moves. For example, when we see that Bitcoin is going up, we see that Link is going down. But when the moves were a little bit moderate, it was kind of same. Take a look. Bitcoin is going down, Link is going down. Bitcoin is going up, Link is going up, right? Here they are both going down, here both going up, down, up. But when it comes to these extended moves, they are doing opposite. So just from the start, you can clearly see that Link/Bitcoin, when it comes to Bitcoin/USD, these two are almost the same. They are only acting different when there are big movements. And once again, here you have all the other data available as well. You can see mean reversion, standardization. You can also see frequency. You can even see a probability. So just from the few seconds, you have a very clear idea how this asset is performing, right? So let me show you another thing. This is my favorite. I traded this a lot. So let me show you Binance coin against Ethereum, and we will compare it to Ethereum itself, right? Take a look at this. This is not like Link and Bitcoin. This is basically like 90% opposite. We are going up here, we are going down here. Even the small bumps, take a look at it. Up, down, up, down, up, down. Once again here, down, up, down, here, up, down, up, right? It is almost like a mirror. So when you are trading this pair, for example, Binance against Ethereum, and you are comparing it with Ethereum against US dollar, you can gain very big advantage, and you can make some pretty decent trades. And you can make pretty decent trades just from this information, just from this data. So take a look at mean reversion, for example, right? When Ethereum is very overextended and it is way below the mean reversion, and we knew that Binance coin is acting quite opposite like Ethereum, when it comes to November 27, we can anticipate that on November 28, there is quite a big probability that Binance coin will go down, right? So let me take a look at November 28 here. From November 28 until November 29, we went obviously down just from this simple chart. But of course, we won't be doing trade just based on one simple chart, but we have 6 charts here. We see correlation, we see our trend. We see that, for example, right now, Binance coin is in the quite strong downtrend. We have 64% 4% with a negative price change. So what we want to do is that we want to watch Ethereum. Why? Because Ethereum is bigger coin than Binance coin. It is the second largest coin, second largest crypto, right? Bitcoin is the king, then the second is Ethereum. So when we know that we are going down when it comes to Binance coin, all we need to do is take a look at Ethereum, and when Ethereum will be going up quite a bit, there is very good chance that Binance coin will go even lower, because we are already downtrending, and when the Ethereum will be pumping, we can profit of that and short Binance coin. Of course, that we will add our technical analysis on the normal chart. We will do our research and everything, but just from this perspective, we know that we have edge over other traders, because other traders are just watching Binance chart. That's it, Binance coin chart. But we are watching Ethereum chart, and we know that Ethereum is superior to Binance coin, and we know that these coins are acting in a very opposite way. So we are waiting for Ethereum to either dump or pump, and based on that strong move, we can enter Binance coin and either go long or short. And the advantage of this style is that these altcoins, and even altcoins that are traded against other altcoins, for example Binance coin slash Ethereum, not Binance coin slash USDT, the advantage is that they are very volatile. So it is very easy to take 0.5, 1 or 2% profit on the coin, because it is moving a lot. And here you can try to find very different things. As I showed you, for example, Link and Bitcoin, it wasn't really like mirror like here. But for example, Binance coin and Ethereum, it is like mirror, right? So it is really up to you, and you can find very different and great things here. You can find some patterns in standardizations, or even in probability, or even mean reversion. You can find, a lot of different things, because here you have all your information in one place in a very simple chart. It is live data and everything, right? But another thing is that you can merge this with your trading. Okay, let's go to Binance, for example, right? Let's take a look at Binance. We want to go to Binance Ethereum. So BNB. Okay, so now we have Binance / Ethereum chart, right? We know that these are acting in a very opposite way. We know that Ethereum was pumping but was reaching all-time high, so now it is going a little bit down. We know that Ethereum's price is 638. We know that it is almost all-time high. It is 97% chance that it will go lower. Ethereum is back to the standard level, so we are not anticipating a huge movements. Mean reversion is also curving a little bit to the downside. So just from this information, we could anticipate a little pump on Binance coin, like 0.5%, 1%, 2%, whatever. Let me take a look at the price. Oh yeah, here. So today we were up 1.5%. So this is what I was talking about. So okay, it already happened, right? But it doesn't really matter, because it just proved my point that just from this you can get a pretty nice advantage, because quantitative approach isn't that common. So not a lot of people is there. A lot of people are doing technical analysis, so everybody is basically waiting on the same thing, right? But not many people is doing this. These things are mostly done by algorithms or bots. But now you can use it for yourself as well, and you can combine it with a technical analysis, right? So another thing here is this sync, and here you can choose whatever crypto you want. I think in free version you can trade Ripple, right? And in paid you have all these other. So for example, if I click on Binance Coin, you can see that blue one is Bitcoin, red one is Ethereum, and yellow one is US dollar. And the idea behind this is all these three things should be in synchronization. If the BNB slash BTC is going up and BNB and ETH is going up, BNB and USD should be also going up, right? So the idea is that it cannot go for a long time without synchronization. So take a look at this. USD and Ethereum price was going down and Bitcoin price was going up. So in the next column, Bitcoin price should go down because it needs to be in sync. So as we can see in our next data set, Bitcoin price was going down. So right now we have Ethereum and USD up and Bitcoin down. So what need to happen now? Bitcoin need to go up again because we need them all in the sync. So as we can see here, Bitcoin went up, but right now it is out of sync again. And after a certain time, all three will be in sync. There will be even up or even down, but it cannot go forever, in theory, of course. In theory, it cannot go forever like this, because at some point it should be equal. So let's take a look at another. So for example, Ripple, right here, we can see that Ripple is in sync, 100% correct. All three down, all three up, all three down. So right here, we don't have any information that it should go up or down because they are in sync, right? But BNB, we were, getting different signal. Here, Bitcoin was up, so we knew that it needed to go down. Here, it went down, but now it was out of sync again. So now it needs to go up. Here it went up, but now it is out of sync again. You get the point. This chart is a 5-minute time frame, as you can see, 3:50, 3:55, and 4 p.m. And it is updated automatically every 5 minutes. But if you want to have a live feed, you can refresh it here, and it should give you more accurate things. Of course that we just cannot make trade based on this one indicator, but what I'm saying is that you can do your thing in normal chart and you can anticipate some move, and then you can take a look at this thing and maybe it can help you to gain a little bit more insight, right? Or even if you won't do any entries or exit based on this sync indicator, you just can learn how this asset is performing. We can see that Binance Coin, for example, is going out of sync quite often. We saw that XRP was pretty stable, Now we have new information, but it was in sync here, it was in sync here, right? So now we are anticipating that price on XRP slash Ethereum should go down as well. So we can take a look, for example, XRP ETH, and as we can see, we are already going down. Look, we went down by more than 0.30% in this candle. So you can see that this sync is also quite useful. And think about it this way. We can anticipate our move, right? For example, like I was talking about earlier, we are anticipating big movement on Ethereum and we want to do a big play on Binance Coin. We know that Binance Coin is basically acting exactly opposite as Ethereum. So if there will be strong move upward, we know that Binance Coin slash Ethereum will go down, right? So that is our first check. Second check will be that we will go to our normal chart here, Binance Coin slash Ethereum. We will do our analysis. We will set our levels, we will set our indicators, we will draw trend lines, support, resistance, and we will mark what are we waiting for, right? So that will be the second thing. And then we can also go to our sync, and when we will be ready, we can take a look here. We can try to manage our entry or exit even more precise with these things, right? So everything together is playing and cooperating together. So this is basically all the data and all the things combined together. We have normal charts, we have technical analysis, we have quantitative analysis, we have our sync indicator, right? We can do this with whatever we want. We can select whatever we want. But once again, even if you are just using free version, you can do this with Bitcoin. You can download Bitcoin prices in Excel. You can do computing and all the calculation by yourself. The data is available. You can also take a look at percentages. So take a look at this. We can go to, I don't know, Binance. And if there is something like that, only 0.08, 0.05, it is, on the smaller side. But we saw that when we were looking at the XRP, it was like 0.5, 0.6. So if we have this big out of sync movement, which is 0.5%, not only 0.08, but when we catch these 0.5% movements, you can do very nice trades just basically based on these if you know what you're doing. And as we can see, we would have made 0.5% just on this one candle, because XRP Ethereum was out of sync by 0.5%. So once again, advanced thinking about trading isn't just straightforward thinking like 99% traders are doing, that they are watching some coin, for example, they are watching Bitcoin and they draw the lines and they are waiting for the retest or things like that, right? I'm not saying it's wrong, it's 100% right, and you can make money that way as well. But what I'm trying to say is that if you are doing 90% what other people are doing, it is a little bit more harder to gain pretty decent profit, because everybody is kind of doing it. But if you are thinking about the trade in not very straightforward way, you have very big edge on your side. You can learn that if one coin is pumping, other is dumping. You can learn by how much. You can find the patterns in mean reversion, in frequency, in probability. You can combine it with technical analysis, and it is, I would say, much more sophisticated way if you want to take certain trades. Because once again, we would make a lot of money on the BNB/ETH pair just based on this, because we knew that Ethereum is superior, and we knew that if it is pumping, BNB will be dumping, and we knew where we were when it comes to mean reversion and probability and standardization. So we knew what was going on. We knew it even before we take a look at the BNB coin itself, right? We haven't even opened normal chart with BNB, but because we went through all this, we knew what we are waiting for, and we were prepared for certain things. And then you can add this sync tool and you will have huge edge over everybody.